Point Zero Forum, Zurich, 1st to the 3rd of July, 2024. One of the big topics that's going to be put out as a roundtable discussion is stablecoins in the monetary system of the future. The idea here is that you create a stablecoin that pegs to a major currency, usually the US dollar. There's a number of major exponents of it. One who's attempted to try and embrace regulation around this, which is the USDC circle, and others that have not, and actually they dominate the market. Tether by far and away dominates the US dollar stable currency operation within the Ethereum world of fantasy. There's a number of issues around it. One is that, well, what are you stabilizing against? Because this currency that you're referring to is most definitely not stable. The amount of money that has been created by central banks, the Fed, for example, on the US dollar, we now have just under 8 times more dollars in circulation than we did in 2008. This isn't a sustainable reality. This is destroying, debasing money. So you're stabilizing against what? And then part two is that you're looking at fractional reserve banking, which then greatly augment that creation of new money. And then the third aspect is this piece that, well, what is a stable coin and how trustworthy is it? If only one of them, and the one that people aren't using as much as perhaps you might think, if only one of them is trying to be an auditable, genuine, fully asset-backed instrument, and the other is refusing to submit to any kind of audit whatsoever. In fact, some of the very best takedowns on Twitter around blockchain focus on Tether and its fundamental place within the Ethereum magical kingdom. So over to you guys.
Yeah. So I guess the thing about why you need to stabilize crypto in the first place, I would say, is because even though Bitcoin was designed originally to be an undebasable currency where you had predictable money supply, the technology, the way the chain actually operates, you can't really use it as a viable currency.
It's a proof of concept.
Yes, but since it was a very successful one, it sort of veered into being a speculation coin, where people would, the business case around dealing with Bitcoin is to get the price to go up and then profit from it. And so the way you could actually make a stable, intrinsically stable cryptocurrency is to, well, start off with the similar principles as Bitcoin, but then also remove the obstacles to having it be a usable currency. So you can actually buy stuff with it. And part of this is you have to get better throughput. You have to get better response time. You have to make sure that settlements happen at least preliminarily within seconds, and reliably quickly thereafter. You also need to have much better throughput. You need to have a way to scale up.
You need to make the cost a great deal smaller. I mean, one of the things that fundamentally undermines Bitcoin's operation is the cost of operating.
Yeah, and personally, I also think that blockchain technology, if you do these things, and we also have some technology down the pipe where you could go much, much faster. You could actually do trades at the millisecond level, purchases that are robust. And then you can essentially unlock real-time transactions on the internet where they are so quick and typically so low value that you don't really worry about the the value of the crypto fluctuating, because it doesn't fluctuate that fast. You'll be done before the needle moves. So you're not incurring any exchange risks. And this is an area of transactions where the normal fiat solutions can't play, because they cannot be made nimble enough, not without centralizing totally into a digital currency, which has a huge number of other problems. So I think that we can actually make an intrinsically stable currency by going back to the idea of what is currency in the first place, what is it that makes a currency stable, and then remove the technical hurdles. And that's something that we are happy to talk about
So
at length.
we should solve the problem rather than pretend that the square wheels on the axle aren't square.
Absolutely.
Yeah, I think that's what it fundamentally boils down to here, because ultimately, stabilized to what? So there's a number of problems, as we've said. Number one is you're stabilizing against something that actually is not stable and is being continually debased. One. Two, prove that stabilization. Do you actually have the assets to underpin the position that you have? And are those assets sufficiently liquid that you can meet liquidity requirements? And I think, as you've identified, it's sort of a really poor answer to a series of problems. So, for example, CBDCs, why wouldn't we think that there would be a CBDC that was issued by the Fed and therefore remove the need for a so-called stablecoin, because you're not having to trust by proxy, which is basically what we're doing with a stablecoin. We're trusting the dollar by proxy with something that's an unregulated intermediary player, Tether, which dominates as I say, the Ethereum magical kingdom. And when the emperor's clothes are exposed with Tether, and it being so endemic across the Ethereum magical kingdom, you'd have to conclude that that will be the earthquake that shatters that picture, that happy picture where blockchain is a means of transporting leprechauns on the back of unicorns from Money Tree to Wishing Well. Craig, would you add anything to bring us home on this?
It's really that solving the currency problem itself on a technological level with blockchain has been a problem so bad that people have they've omitted saying currency when they say crypto. Now they say crypto, they don't say cryptocurrency.
Mm-hmm.
We have to fix that problem, and then everything else falls into place. And the whole point of this exercise was to get away from the instability of fiat currency in the first place. Why would you just use USD? Why would you use USDT when you've already got USD? Like, it's just a new layer of complications, and it's silly.
It's trusting the untrustworthy by proxy through the unregulated.
Yeah, it's like let's layer these problems up and it'll go away that way. No,
it's not. Okay, thank you very much for your time, guys. Appreciate it.